Okay, and we are live. Hello and good day to everybody who decided to spend their 30th of December 2024 or at least part of it watching a conversation in English language between myself and Bob Burnett. Is this how you pronounce your name? Okay, awesome. So, how are you, sir? Thank you. So please, for the people who do not follow you on Twitter, who haven't seen a podcast before, can you please, like in a few words, just tell us what have you been doing before Bitcoin? What do you do related to Bitcoin today?
Goes back early into the personal computer industry. So I spent the first couple decades of my career designing personal computers. I spent most of that time with a company called Gateway, which during the 90s, early 2000s was one of the top 5 personal computer companies in the world. And I was the chief technical officer there. So which means I led the product development. So I designed laptops and desktops and PCs and those sort of things. And there's a long story that goes with it, but much like you, we were talking before the stream went live. I entered Bitcoin in 2017, and I came through the mining is on the development of small to medium-sized commercial mining sites. I'm also on the board of directors at Ocean, which is one of the world's maybe most notable mining pools these days. We're growing quickly. I also serve on the board of advisors at a company called M5ers, where we're developing our own ASIC. And also board of advisors of a company called Block Spaces, which is developing a block space forwards future product. And also on the boards of several funds, the Epoch Fund with Eric Yakes. I have my own fund, the Barefoot Bitcoin Fund. I'm an advisor at SAS Mining. So I've got my fingers across a lot of different places within the ecosystem.
Okay, awesome. I just listening to this, I have a first question that just spawned from what you just said, because back in 2017, when I was a fresh Bitcoiner myself, the block size wars and how the team was like, we have to increase the block size in order to get more transactions in every 10 minutes. And the other half of the team was like, well, that's not the best idea, because once you do it, you cannot revert it. And at the same time, we are not at the moment like out of other technical solutions to solve the problem. So I don't completely know what exactly happened, and Jihan Wu pops up like a name, like a very influential miner who apparently had, I'm not sure what's the word, but let's say an edge in mining around the ASIC miners. So can you please explain to us in short what was the situation about the ASIC miners, and is this solved currently now with the SegWit soft fork that we have?
I believe the situation you're referring to related to ASIC Boost, which was basically that Bitmain was putting some techniques into their machines that would give them an advantage. I mean, I guess maybe that would be the simplest way to do it, and not disclosing that was out there. And so it was creating an unfair marketplace. That problem does not exist today, but it's also part of why we need decentralization, or at least more competition in the ASIC side. We're still in a pretty precarious position, frankly, where we've got somewhere between 85 and 90% of all ASICs coming out of Bitmain. And when I use the word ASIC, by the way, I'm talking about the chip, not the system, to be specific. And you know, we have What's Miner, we have Canaan, we have a few others emerging, Blockstream, My Effort, M5ers. I think we can eradicate this issue within the community within the next several years, but it is really important that it be solved, because we cannot scale as an industry with just a single source of these chips. And we always kind of are exposed to, whether it's what would I say? We're exposed either from the perspective that they may try to do something malicious, and I'm not trying to accuse them now of doing something malicious, or just a mistake, right? Things can happen. And so we need this diversification. It's one of the things I preach a lot about. We need diversification of ASIC mining capability, of system capability, of geographic diversity, mining pools, all these sort of things. We have to maintain lots of different points of activity. Otherwise, we create a capture point for Bitcoin.
Yeah.
Right.
Yeah.
And yeah.
So why can you like explain to us why is this a difficult problem to tackle? What I mean by that is, like, if we have a free market and we have a revenue source to be captured there, is it like too big of an investment to enter the space? Is it there is a lack of engineers, of human capital in order to actually properly do a competitor? What's happening?
Well, there are two issues. You've actually identified them both. One is money, and one is intellectual horsepower. But we'll start with the money issue first. So to give you an idea of what it takes to bring a new ASIC to market, it probably on the low side is a $50 to $70 million capital investment to bring an ASIC to market. And in reality, it usually ends up being more than $100 million. And so it's a massive effort to get it to market. And if you, as a developer of the chip, if you make a mistake, it's kind of an all or nothing thing, I guess is what I'm saying. That because if the technology you bring to market is not on par with what's coming out of Bitmain, nobody wants it. And there have been some very large failures. For instance, Bitfury, we worked a lot with Bitfury back in that 2017 to 2019 era. Very formidable company, very large company, who was developing their own ASIC. And they continued to run into problems that delayed the schedule. And they would come to market 6 to 9 months too late. And by that time, the efficiency of the chip they were bringing to market, instead of being technically leading, was technically behind, and they had no market. That said, the second piece is, like you said, intellectual horsepower. There's a very small number of people that understand the logic and the techniques to develop a chip like this. They're very, very limited. So when you combine those two things, the massive amount of money and the small amount of people really capable of designing such a thing, it really does create a problem. Now, with time, it should commoditize. It should get a little easier, but that's a decade or two away. Okay. So I remember that Jack Dorsey started working on a new miners, and
I might be mistaken, but I think I'm not dreaming. Like, didn't Nvidia also say that they would be gonna be entering the ASIC miners back in 2021 or something?
I don't think Nvidia ever made a definitive claim that they were going to enter. They've obviously done a lot on the GPU side, but
or was it? I was just gonna say, wasn't it GPUs specifically for Ethereum mining or something?
Well, they did do that. They
okay.
did, and they were very well. They never did the ASIC. They always made the GP. They were very. And they always had a mixed feeling about whether or not they wanted their GPUs being used for that, because they were having trouble meeting demand for other purposes. Now, Jack, though, and to his credit, his team has developed an ASIC. There are small amounts of them starting to float out into the market. In my mind, what's really important, though, too, is we have to separate as a community, hopefully as an industry. What we'll see is a separation of the companies developing the ASICs from the companies developing the systems, much like you have it in the personal computer world, right? For the most part, we have Intel and AMD, for instance, making the CPUs, and we have, whether it's Dell or my old company Gateway or Toshiba or whomever, making the personal computers. They're very different skill sets to make a system and produce a system in volume from making the chip. And I think the world will work best when those things are specialized and coming from different organizations, where because we need mining equipment serving a lot of different needs. Right now, for the most part, here's what happens. There is such a limited availability of the silicon, of the chips. And obviously Bitmain consumes them all. So we're all pretty much forced to just use the S19, S21 shoebox form factor system. And we have to make it work in our environment. So, like, in my opinion, the design that they primarily use for those is equivalent to a personal computer. Okay, but we also need products developed for home applications. For instance, like the BitX, the FutureBit products, like those, for those of you who are out there familiar with those. But those companies, for the most part, like the BitX projects, what they have to do to get chips is they are recycling chips off of used boards. So they cannot buy the chips directly from Bitmain. So God bless them, they're doing really great work, but they are scavenging the world for these chips. And by the way, they have to do what's called reverse engineer those chips, because Bitmain doesn't publish specifications for the chips. If you buy a chip from Intel or AMD, you get a big book. It's called a data book, and it tells you everything about that chip, what happens on every pin, what the electrical profile of every pin is, what the timing of all the pins are. Bitmain publishes none of that information. So the people like BitX were trying to develop designs around those chips that they've scavenged. They not only have to scavenge the chips, but they have to reverse engineer to figure out what is happening on the chip and how to communicate with it.
When I listen to this, I'm like, that's crazy, because I'm literally thinking, like, is it really that hard? Apparently it is. And then I'm thinking, why isn't there employees of Bitmain that are like, if you boss, I'm gonna make my own company, and just go to some billionaire who's willing to invest $100 million and make a competitor or something, this is how I picture the world of competition and so on. Like, I'm stunned listening to this, that, you're going to, the trash bins and scavenging some thrown away miners in order to create your own product. That's crazy.
Yeah.
So, and why are they so much ahead? They are so much ahead just because they started very soon. They appreciated Bitcoin at the very beginning, back in 2000, and I don't know what year is it, 11, 12, 13, whatever it was. And they just, you know, over time they got so much ahead that now it's extremely hard to catch up to them. Is this what's happening?
Well, to a certain degree, yes. But there's one other component, which is Bitmain understands the Bitcoin market. And so most of these other companies or people within the Silicon world, like the VCs that would fund such efforts, it's difficult to find. Like you said, go find the billionaire to fund the project. You're right.
Okay.
The problem is you have to convince the billionaire that an investment in such a product is worthwhile, because he may have to put 50 or $100 million into making this happen. And he looks at Bitcoin bull market, bear market, bull market, bear market, looks at histories of companies like Bitfury that failed trying to do this, and says, well, what really is the opportunity? What's the risk profile? It's pretty high. Now, I believe that the upside is phenomenal, though, because, you know, we have, at some point, hopefully very soon, we will see competitors to Bitmain, large competitors to Bitmain, producing silicon, and it will radically change the market. But even then, you still have one more piece to the puzzle, which is you also have to convince either, basically today, TSMC or Samsung, there's a couple other players starting to come up, to produce the chip for you. So you have to have that relationship as well. So you have to, because, TSMC and Samsung have massive demand for their chip fabrication. They're leading at chip fabrication. So in today's world, what you need is, you need access to their 3 nanometer technology, which is the very best stuff. And it's the same technology that companies like Tesla and Apple and Nvidia and Broadcom also want. So it's difficult. It's a very hard puzzle to solve.
Well, Bob, look at it from the bright side. You as an American citizen in America, thanks to the Kamala Biden administration and the CHIP Act, now you definitely have a bunch of factories producing many chips, don't you?
Yes. Thank you for that optimistic statement. Yes.
Jokes aside, though, that is, hopefully something that, because you said Samsung and so, these are not American companies, they're Asian companies, right?
Mostly, yes. Yeah. The Taiwanese, the Koreans, the Chinese, they're all big in this, yes.
Okay, I've written one other question listening to you. So, are they holding their new chips to themselves? So, I had this conspiracy like since 2017 or 18 or 19 or 20, whenever I thought about it. I put myself in the main chip manufacturer for this. I know that when I sell my product, people are gonna be making money out of it, and they're gonna be making good money. Like it's like the analogy with the in the gold rush, the people who get really rich are the ones selling the, how is this called, the mining picks.
Yes,
but not the ones mining.
Selling the tools, selling the tools to mine the gold, yes.
But here, though, having in mind that you can create new versions that are so much more efficient than the old ones, will maybe holding up a generation or two of the mining picks, maybe you can make some very good profit there. And by the time you sell to the rest of the market your own mining pick, you got a new one that's so much more efficient. So you're still making a very, very large margin. Just round the numbers, let's say at 5 cents per kilowatt hour or 3 cents per kilowatt hour or whatever of electricity. If you're making like 100% profit, meaning you pay 50K for electricity and whatever, and then you mine a Bitcoin at 100K, maybe with the newest generation, you can make it for 20K or whatever.
Well, I can't say I know what's going on inside Bitmain, but it's logical that they would save some of the best stuff for themselves. I guess that's their right to do such a thing. They do have to recover capital. And so I think that there's probably a little bit of both going on would be what I would speculate. But, you know, Bitmain, I guess I have issues with Bitmain, but what I will say is they are a highly vertically integrated company. They make the chips, they have the mining pools, they make the systems, you know, they have the ability to do anything pretty much within the Bitcoin landscape. And I'm sure they're looking at how to maximize their profit given their position. I think it's a dangerous position for the Bitcoin community. And it worries me. It's probably one of the biggest worries I have is that they still have too much power, in my opinion. Even if, and I'm not accusing them of doing anything wrong right now. I think they've shown behaviors in the past that I think are questionable. Recently, I haven't seen anything that really worries me, but it's so easy for them, given the power that they have, to do things that really would cause problems. For instance, this is a little different topic, but the amount of influence they have over the pools and the block template creations, their ability to enforce censorship if they wanted to, are all very scary things.
I don't understand what this means. Block template creation. So just listening to the term, I would imagine like, no, I'm not gonna say anything. What is that?
What is a block? Okay. So if I was to send you some Bitcoin right now,
yeah.
Right? I wanted to send you, we'll just say 1 Bitcoin. So I'm going to sign that transaction, and it's going to be broadcast around the world to all the nodes, right? And each node has its own mempool. And are you familiar with the mempool?
Yes, I am. I start thinking on each node has its own mempool. Yeah, makes sense. It's not like a shared memory. It's not like one server where we all listen to. Yes, every node has its own mempool. Yes.
Yeah, and I said that specifically because I think a lot of people think of like the mempool.
Yeah, but it's not.
That doesn't exist.
Yeah, I understand. Yeah, makes sense. Yeah, true.
Yeah, every node has its own mempool. Okay.
So when I go to the website to check the mempool, actually I'm checking that site's node mempool and not the mempool. Yes.
Correct.
Okay.
Correct. Yeah, and it's a very important distinction. Now, for the most part, they're all the same, but they're not exactly the same. And it's also possible for a transaction to not be broadcast, by the way, just a little thing. So in other words, let's say because I'm a miner and I create my own block templates, which we'll get to what that is, I, for a variety of different reasons, may choose to not broadcast the transaction I'm sending you.
Yeah,
meaning
if I understand correctly, what you're saying is I have my own filters on what transactions I accept. By default, it's supposed to be just like a fee competition, and I'm interested in the top fees paid per kilobyte that fits in the block size. However, I might have a personal priority of coming from this address or from that address, regardless of the fee. For instance, I always include them. They're my highest priority. It doesn't matter the fee and so on. So to imagine this should be something related to the block template maybe. And also, let's say ones that I'm completely uninterested into, I'm not even going to broadcast, even though to me, that's a bit of a shady thing to do, because maybe you're not, but you should still relay them, broadcast them to other people, because, you know, they might include them.
Well, there may be different, you're on the right line of thinking, right? So what happens though is, let's say, because I'm a miner and I create my own block templates,
Okay.
If in my mempool right now there are, let's say, 200,000 transactions, right? Give or take a few. There's 200,000 there. But the block that I'm trying to create and hoping to win, I can only fit about 4,000. Okay? Because there's only 4 million weight unit. Typically that ends up being about 4,000. So by what criteria will I pick the 4,000 from the 200,000, right? Because I can only pick 2% of them, right? So what am I going to use? Now, the truth of the matter is, it is my right as a miner to pick whatever I wish.
And in theory, the 51% attack is I'm gonna wish to include no transactions and I hold the full network to no transactions are happening ever again. Because I have over 51% of the mining power and I just hold the network. In theory.
Not exactly, but let's come back to that.
Okay.
Let's come back to that.
Okay.
Now, so I think most people believe I'm going to pick the most quote unquote expensive transactions are the ones with the highest fees. But I don't, as you said, I don't have to, because if as an example, one of those transactions was me sending money to you, I'm going to put that in as free. Okay. I'm not going to pay any transact because I'm mining it, right?
Yep.
I'm just paying myself. So I put it in at 0 or a very low number. And so I'm not going to pick just the most expensive, but there are other reasons why I may wish to pick something other than those 4,000, the most expensive 4,000. We can talk about that in a minute, but we're talking about the process. So what I call every miner, and I'm going to be very specific about the term miner. Okay. So, and the word to be a miner, you need not only to have the hash power, but you need to have the node and create the template. You have to be connected to the network. Okay.
Okay.
So if you have a mining, if you have an S19, let's say, you are a hasher. If you connect to a pool, let's say Foundry or Brains or something like that, they are the miner. You are, I call it mercenary hashing. Okay. But they are paying you for your
I don't have a template and I don't control it and so on. I get it. Okay.
Yeah. And so I get specific about these terms because I think what's happened is, what is a miner? If we go back 15 years, all the miners not only provided the hash power, they had their own node, they connected, they created the templates, they did everything, okay? Because the truth is, if you are a hasher, meaning you have connected to a pool, you really don't know what.
Am I a hasher or a miner here?
There you go. Yeah, absolutely. Love it. And that's important, by the way. I think everybody having a small say in the matter is wonderful. So today, that we probably only have, well, basically the only people or the only organizations, you have some people doing some solo mining, small people doing some small solo mining. You have people running on Ocean with Datum, and you have Marathon, which runs their own pool. Okay, all those people, which probably represent about maybe 6 to 8% of the world's blocks, are produced from solo miners. Everything else is coming through the pool.
Wasn't Ocean the big deal about it, that every hasher in Ocean has control over the template, and if you find the next block, the Ocean uses your template, but you split the profit with everyone because obviously the other are gonna split it with yourself.
That's correct. That's correct.
Okay. Yeah.
There are many. I don't want to turn this into an ad for Ocean. And as I said, I'm on the board of directors there. I'm an investor, so I don't want to come off as just. I hope other pools come out that offer the same capability and other solutions. I'll say that because I think it's very important that instead of we have 90% of the world's hash rate is directed to 6 pools. And those 6 pools, so there's 6 templates on each block being developed by those companies that 90% of the hash rate's directed at. Then you have Mara, 5-6% of the world's hash rate. They're creating theirs. That's the 7th template. And then basically you have Ocean, and we're creating several hundred templates. Unique templates, right? Because each of the miners has their own.
So are they public? The algorithm of the templates of the 6 that control 90% of the hash power, are they public?
No, they do not publish their what's called their typically the term is their filtering criteria, which you could think of as what is the algorithm by which they choose. The answer is no. You only can see when they win a block, you can guess what the algorithm might have been at that point in
based
time.
on what is in the mempool and what is not included and should be.
Yes. Yeah. Okay. So we're talking about reverse engineering again. You could reverse engineer and deduce it. And that's why occasionally what you'll see some controversy because, for instance, F2 Pool recently, for the second time, was accused of censorship, what I would call real censorship, because you could see that they were specifically excluding certain addresses. Which that's the great fear, right? The great fear. We talked about 51% attack, and we can talk about that. To me, 51% attack really is not something to worry about. What I worry about is, hey, there's only 6 pools. There's only 6 templates being created. 2 are US, 4 are Chinese. It doesn't take a big effort for the governments of those 2 countries to go to the pools and say, hey, here is a blacklist. You can't do things to these transaction locations.
The real big fear though is not the templates of the 90% of the hash rate. The issue is a template on what block you built on. Because let's say the rest of the 10% of the hash rate, if they have decentralized templates or whatever, and they include the filter transaction by the rest of the 90% of the hash rate, and they get so much more fees because, they exclude some very chunky, high fees transactions, and the rest of the 10% hash rate is very happy because every time they mine a block, they're like, oh man, I'm, like the Scrooge McDuck or whatever making so much money. But if then the 90% decides not to build on top of that block, now that's a problem.
You're exactly right. To me, that is the 51% attack. And so it doesn't have to be 51 even. Like in my mind, ideally, we have well more than 50% that is outside of the big pools. That's ideal, right? And we would love to see it like 70-80%. But we really want to see at least like 30-50% be outside of the big pools, because then it's going to start harming them. So I'll give you an example. Let's say it's 60%. Let's say 60% is the big guys and 40% is the little guys. So the little guys win a block, right? Now, and let's say that was block height 1 million. At block height 1 million, the little guys with the 40% won the block. If the big guys say we are going to ignore the block and we're going to continue to try to mine and come up with a new 1 million to replace that, to orphan the other one. They have to mine that block. They have to find 2 blocks before the 40% finds another block, because they have to find 1 million and 1 million one. It's not so easy, right? So if you think about that math, there's going to be a lot of wasted energy on the big guy side. But as you said, if it's 95% the big guys and 5% the small guys, they'll typically be able to do that.
No problem. Yeah. It won't cost them much.
Yeah.
And
right.
to force the other ones to comply as well, because otherwise they're not earning any money.
Yeah. Now, if that happens, I think we end up back in the equivalent of a block size war within the community, right? And hopefully what we would see is some of the hash rate move out of those big pools. But the problem there is most of that hash rate is becoming very corporate. So like about 30% of the world's hash rate is the big public miners. Mm-hmm. And with the exception of Marathon. And
when you say the big public miners, first you say miners, not mining pools. Secondly, you say public. But when I hear a public, I'm thinking of a public company, and then I'm thinking only of US.
Public company, meaning Riot.
Which are US though?
Queens. Well, it could be anyone, but most of the mining companies are US based.
Public mining companies.
Public mining companies are US based. Now, like I said, about 70% of the world's hash rate is outside of their control today. So that's very good. I think as a community, we would really like to not see the presence of the US public mining companies get any bigger. Okay. I think it becomes a real problem because of this. Because what happens is the large public miners typically have sweetheart deals with the mining pools. Yeah. They pay a very, very low fee.
Yeah.
They sometimes have none of this is illegal, but they'll have different types of relationships. They may have equity positions within the mining pool, or vice versa. They have made contractual commitments for the low fees to push a certain amount of hash rate on a consistent basis. They also have a lot of regulatory compliance issues. So switching pools sounds like an easy thing for them. It is technically, it's not practically. So they can't just change overnight. Like if something bad happens, they have the way the reporting works, the way the payouts come in, the custodial arrangement of the payouts, all these sorts of things have to pass through auditing and regulatory compliance for the big mining companies. So that's what worries me, is I think, as a community, we really need to be pushing for more pools, more template creators. I would highly encourage people who are small individual miners or have other, small commercial operations to really look at alternative pools and stay away from the big six.
Okay. So I feel like, the conversation is a bit heavy, but
yes.
But it's important questions that, like we never had a miner coming in, like a person who properly understands mining and is into it and so on, who, can give us his view on things, because, like you can tell by my questions and my understanding of what you're saying that, like I'm not completely a newbie and completely not understanding what you're talking about.
Absolutely.
But, I have no practical experience. I haven't spoken before with a person who really lives and breathes it. So this is why we're going through the tough questions, just because it's important for us to, have a clear view on what's happening. Okay. So we have these 5 questions from George from Bulgaria. He lives in Germany, and he's written them in Bulgarian language. I'm gonna translate them to you in English. I haven't read them, but I noticed that they not connected. They got a bunch of likes, so I would imagine these are the best questions because we have a bunch more, but I don't think that we're gonna have the time to go through all of them, and maybe some of them you already answered. And just to mention it later on, I really have one question about the future of mining, and my view on mining was built up and changed throughout 2021, 2022, 2023 with the whole perception of mining is a location independent or more like a movable, easily transportable energy consumer who can use who can be used like a battery where you store energy, meaning you capture it, put it in Bitcoin, then store it, or you can just sell your goods location independently from the energy source. So the 5 question from George.
All right.
So he starts with that you're one of the best guys to speak about, and that he's watching you all the time. So here are his 5 questions. The first one is, isn't it already clear enough that ocean is more economically profitable, viable to mine there instead of all the other PPS, FPPS pools? Firstly, what is PPS, FPPS pool?
PPS is pay per share and FPPS is full pay per share.
Okay.
So yeah, just real quickly. So all the big mining pools basically use this FPPS payout method. So what happens is in those techniques, in that payout method, if you connect your hash rate to their pool, they pay you every single block that gets produced, whether they won or not, it's not relevant. They essentially are saying, we will pay you if you, for instance, were 1% of their pool, and their pool was 10% of the world's hash power at a given point in time. They will pay you based on your percentage of their pool and their percentage of the world's hash rate, that percentage. So you get paid every 10 minutes by the FPPS pools. It's highly appealing because there's no luck involved anymore, right? You as a miner get paid, as a hasher, somebody said that term, you as a hasher are getting paid on a very consistent basis. The problem is, what it means is they are taking a lot of risk. There's a couple problems. One is they're taking a lot of risk. So because they don't know how many blocks they're going to actually win in a given day. So they have to have a large pot of money sitting aside, a lot of pot of Bitcoin setting aside, because their luck is going to go up and down. And just like anything, if anybody that's ever gambled, you're going to have runs of good luck and runs of bad luck, and the runs of bad luck can be very bad. So they have to, and there's a cost of having that pile of money there. Okay, so I started looking at this situation even before I got to Ocean 2 years ago, and I started to say, hey, I have some of my hash rate connected to pool A and some to pool B, but I don't get the same amount of money every time from A and B. It should be the same. Why isn't it the same? And I realized that the formula that they were using to determine how much to pay me was actually different. And it had to do, I guess, primarily with, their cost and risk tolerance. So I commissioned a study. I took 10 identical units in one of my operations, and I connected to 4 different places. Starting a year ago, one of those was Ocean, and then I had 3 other pools. I won't name them. But what I found was a wide variance in actual payout over any extended period of time. And what I found with Ocean was a dramatic improvement in the payout level versus the other ones. Now, the caveat is with Ocean uses a payout method called tides. It's very similar to something called PPLNS, which stands for pay per last known share. But what it basically means is you don't get paid until the pool wins a block. And your work between blocks, the pool is keeping track of how much work you're doing. And so whatever percentage of the pool's work you did between the periods and times in which it wins the block determines the percentage of the block you get.
Okay, so you get, if I understand correctly, this means that let's say we was just one last block and I was not mining. Then I mine for, let's say, the next 24 hours. How many blocks are in 24 hours? Like 24 multiplied by 6?
150.
150. And then let's say in the next 24 hours I do mine. And then let's say literally I stopped at 10. And then the next block gets mined. I'll still get paid because it's gonna track that I did mine during this time, right?
Correct.
Okay.
Correct. Yeah. Yeah. So the beauty is, though, you know, it's you as a miner, when you're with Ocean, you get the benefit of the positive luck periods, and you have to suffer through the down luck periods. And so if you look at it as a business, it has less consistency, and that can be a little scary, and I do understand that that's the problem. But if you look at any extended period of time, 60-day period, 90-day period, a 1-year period, you make more money on Ocean with this payout method than you do with the others.
Yeah. Understand. And I mean, like, come on, like, depending on how much the hash rate of the pool, even if it's only 5% or even only 3%, you still get 3 out of 100 blocks. So this means you still get a bunch of blocks every day. So I mean, the down period is not like weeks, it's not like months. So it's hours. What? I just don't get it. Like, I mean, it makes sense to me as a business. If I have to wait months, not a few hours or days.
Ocean is about 1/2 of 1%, little over that right now, 1/2 of 1%.
Okay.
So it means once every 2 days, once every 2 days is the expected time. Yeah. But sometimes it goes 5 or 6 days. Mm-hmm. To me, it's not a big deal because sometimes we'll win 3 in, like, we've won 3 in 12 hours before as well. Mm-hmm. So it all comes back.
On a long enough time scale, it's gonna equal out literally to just a few a day.
Yeah, it will. Well,
no, not a few a day in these numbers. In my numbers, also a few a days. In these numbers, gonna be 1 every 2 days. Yeah.
Yes, correct. Yep. Any appreciable amount of time, it will fall back to the mean. We call that the luck factor, and a luck factor of 100 means that your luck is exactly as expected, and if it's less than 100, it means your luck is running poor, and if it's over 100, your luck is running good. Ocean's luck over the year since it's been together is like just a tiny bit under 100. Bit under 100.
Yeah. Okay. So the second question from George. So the first one, it's pretty much yes, I would imagine.
Yes, the answer is yes.
Okay, thank you for the whole explanation, though. I did not know about the PPS, FPPS, and that Ocean has a different algorithm to how to pay out to the hashers. Or miners in that case? Is it a miner actually in that case?
They're miners.
They're miners, really yes.
Hashers,
okay.
Yes. Very good. I appreciate your specificity there.
So, number 2 is how is going on with your side project of decentralized random numbers from ASIC hashing? George thinks that you wanted to make a provable random casino.
Okay. That's a great question. He has done some research on me or paid attention, so I really appreciate that. Okay, so I'll back up a little bit for others. Okay, so if we look at equipment like an S19 or an S21 or a piece of equipment like that, I think the general perception within the community is that it can only do one thing, which is mine Bitcoin. Okay. So a few years ago, I looked at it and said, well, I think it can do something else. And number two, it's important to prove to the world that it can do something else, because it becomes an attack vector against Bitcoin. So the reason it's an attack vector against Bitcoin is that if you are a regulatory body and you wish to ban Bitcoin mining, you wish to tax Bitcoin mining or regulate Bitcoin mining, if you look at a given machine like an S21 and you say, well, all it can do is mine Bitcoin, then obviously turning that machine on means you are mining Bitcoin.
Okay.
Okay. I know that sounds very simple, but what I wanted to do was say, no, that's not right. It can do other things. And therefore, you can't assume that because it's on and consuming electricity, that it's mining Bitcoin. Just like you can't assume when you turn your personal computer on, you can't assume what it's doing.
Yeah.
The only way to know what it's doing is to invade the privacy of the owner of that machine and force them to disclose what it was doing. Okay. So that said, the idea I had was, what if I could prove to the world that this equipment could be used to generate and create the world's first auditable and verifiable source of random numbers?
Okay.
So, and that's what we did. We created this technique, which there's a website called chaosengines.com, chaos spelled C-A-O-S. And if you go there, you can right now, for instance, use it to flip a coin or roll a dice or shuffle a deck of cards as an example. And if you do that, what's happening on that website is when you request, for instance, to flip a coin, what's really happening is it is sending that request for that random number to some S19s in one of my facilities. And we are creating the entropy to flip that coin. Now, and that is working now. So it is functional. We do that as a demonstration today. There's a website called digitalhoroscope.io where what you can do is you can go use that same entropy for some fun things. Yes, there you go. So like here I went to the top of the website and there was some button numbers. Yeah. Drop down. Then I clicked on random number and it gave me between 1 and 100. I could change it. I clicked generate number, give me 25. And then here it says nouns 2415, 3 stars. I don't know what this means. And then a hash. So what is happening? What does this mean? So what we're doing in this particular case is we are using some of the techniques used by Bitcoin, and we are actually creating a blockchain of these random numbers. And so we have set a difficulty level of 3 leading zeros. That's what the 3 stars means. And so can you hit it again? Put a bigger number in, like you can put a massive number in actually. Okay, so what has happened is the previous number was 25, okay? And so there is a block in a chain that we maintain. And now we've used that as a seed information and a hash of the same technique to feed into another request and we've generated this number. We were searching for 3 leading zeros. That's what 3 stars mean. If you look at the hash below, what you're going to see is 3 leading zeros, right? 0, 0, 0, and then the hash of that block, and it was a nonce of 5419 on the block that we were.
What's a nonce? I don't know the word. What does that mean?
Okay, so a nonce is when you are trying to hash a block. The ASIC inside the machine has to try to find a hash with the appropriate leading zeros, right? So it's taking the previous block, it's taking the transactions in the existing block, and it's the Coinbase transaction, all that sort of stuff. It's hashing all of that, and it's looking in the Bitcoin network for something like 20 leading zeros, right? So it has to have a source of random numbers, though, that change every time, because if it takes it and uses a nonce of 0, let's say, and it doesn't produce 20 leading zeros, it needs another number to add to the block. And so that's what's happening inside the mine.
Now it had to add this number? Is this what you're saying? In order to create the expected leading 3 zeros? That
number added to the block produced the 3 leading zeros.
I understand. So this means that it created 5,000 permutations until it get to the answer that it's looking for?
Correct.
I see. Correct. Okay, I understand.
Yes. Yeah. So what we're doing is, so this is the proof of concept. And then if you look at, let's see, can you go on decision making? So let's do the dice roll. So now you roll the dice. Okay, so same thing, right? So what we've done is we've created a virtual roll of the dice, and we can prove that it was a fair roll of the dice, and we can prove mathematically exactly how we came up that the proper roll of the dice was a 2.
I understand. Because everyone can recreate with the same math, with the same initial data that is generated every day and on the fly, and you don't have control over that. At this state, at this point in time, when you roll the dice, using the same data, if you do the same math, you're going to end up with the same result.
Correct.
Even though it's random.
Correct. So that's why I say it's the world's first auditable and verifiable source of random numbers.
I see.
Now, if since you have this up, let's look under conceptual.
Okay.
So you can pick a card.
Okay.
Okay. So same thing. Okay. Now, if you look at what we just did, we rolled the dice, we picked a card from a deck, and then go under conceptual one more time.
Okay.
Up on top.
Yeah.
And shuffle the deck.
Okay.
There are other games okay.
And now I'm gonna. Okay. Okay.
Boom. Okay. So now we have an actual shuffle of the deck in order, left to right, top to bottom. So using this then to the gentleman who asked the question, we now have built, but I can't show it to you yet. I'll explain why.
Yep.
We've built a casino using this. So when you play inside our casino, every time you roll the dice, any game of chance, we can prove to you exactly how those cards were dealt or right dice was rolled. So there are there should be no concerns about whether or not fairness existed. And I think this is a big problem in online gambling.
I was just gonna say that, yes, even not in online gaming, like in normal gaming, I don't know what tricks you have up your sleeve as a guy who holds off the card. I don't know with whom else on the table you might be working. I would prefer actually this, but again, if it's provable randomness and not an online casino where again, I'm like, literally they can just made up the numbers, that's it. Like I have no way to verify, and oh, there is regulations, and oh, there is whatever. Like no, unless it's open source, unless it's verifiable, like, you know.
Yeah. So we have actually built the whole casino on the backside too. We haven't announced it yet because we're still working through legal issues, and we're trying to find a jurisdiction that we're comfortable with, that we won't have a problem with, because as you probably know, every nation looks at gambling in different ways. But I will say this too, what we've also proven is we can provide auditable sources of random numbers for all kinds of different things. They're used in the financial industry, they're used in pharmaceuticals, two-factor authentication. There's all kinds of other applications that we are working on. But this is a Bitcoin podcast and we're Bitcoiners. The main reason I started this project is to defend Bitcoin, so that now you can legitimately say to any authority who is trying to turn your machine off because they think you're mining Bitcoin that, hey, you don't know what I'm doing with this. And by the way, your personal computer can mine Bitcoin too, right? It's not economically feasible.
Yeah.
But you have that right.
Yeah. So turn off get in my house and steal my computer because I might be mining Bitcoin or so. And while at it, steal my phone or so because I might be mining Bitcoin.
You could mine Bitcoin, right?
Yeah.
So it means that because we've proven this, now doesn't matter what jurisdiction you're in, that any authority trying to shut you down, you have a legitimate case to say, well, if you're going to shut me down and interrogate what software I'm running on my machine or what application I'm using my machine for, you need to do it for every computer and every phone in the country. So go for it.
I just noticed, by the way, that we have the same hands for the mic.
Yes. Very nice.
Just noticed looking at your say exactly the same.
Exactly the same.
This is a gift from the 2022 group, by the way. Meaning when Jeff, Greg, Natalie, and so on were here.
Oh, how nice of them.
Yeah, because I have like an old one, a shitty one, and I was complaining about it, and they surprised me with a gift that they bought from one of the Bulgarian stores here.
Oh, how nice.
Yeah. So we went through the easy questions, okay?
Oh, okay.
Because George gathered the most of the likes for his questions, and actually people liked the most the third, the fourth, and the fifth question, okay?
Okay.
So the third question is, but the casino things was very interesting and very clever idea about protecting Bitcoin machines and mining and equipment through the, I would call it, even though it might be the incorrect term, the plausible deniability that I might not be mining Bitcoin, so you can't say anything. And it reminded me kind of, oh my God, what was his name? He had a 3-letter name, the dude with the Fediment. Obi, yes. So when I spoke with him, he explained to me how back in 2019 or whatever, he saw the regulations and he was like, okay, we have to do something about it. And then he started the whole project around kind of joint custody, but not exactly custody, and so on and so on and so on the Lightning Network. So the third question from George is, are you still of the opinion about the super high fees on the Bitcoin blockchain after in a few years because of the limited block size Or do you now think that the new OP codes or Great Restoration Project will optimize? And also because of the ETFs, layer 2 centuries, we might have in the long term fees on the main blockchain under 100 sats per byte. Do you see transactions with 500 sats per byte and up consistently in the future? So this is the question, and just a quick side note, I remember the most expensive ever Bitcoin transaction that I paid was close to the peak of the 2017 Bitcoin bull run. I paid, if I remember correctly, like $500, but it was literally, mempool was so congested, Bitcoin's moving left and right and so on. And in the long run, I would just pass the ball over to you and I'll comment on do I agree or do I not agree. But in the long term, I personally am of the opinion of the high fees.
Yeah, so the short version of the answer is yes, I believe that the fees will be very, very high, and I believe it will happen roughly within the next cycle, meaning 4 to 5 year period, that we will see fees in that, let's say 100 to 500 sats per V byte.
So in the past 12 months, I've been saying that something that I was expecting, I expect to finally come to reality in this cycle. And what I mean in this cycle is between this halving and the next halving. And what it is that we know how the halving reduces the emission, and we get closer and closer to 21 million. And because of this, the subsidy of the protocol is getting a smaller and smaller percent compared to the fees, even though, let's say, if the fees are not going up, just because the subsidy is reducing. And eventually the subsidy is going to be so small that either Bitcoin is going to die because there's just not enough capital to pay the miners, or the fees must go up. This is my rationale around Bitcoin fees. And it's about that you must have a defense budget, and that defense budget cannot be 0.00001 of the supply, because otherwise it's so easy to attack the network. So I'm just throwing numbers that I haven't calculated, but let's say it's 1% per year. Let's say so 1% of all 21 million Bitcoin per year must be paid in fees. And when I say must, it's not like a rule, but it's just like economic self-correcting system that would make sense. Otherwise, we're gonna get in a position where everyone with a couple of million of fiat bucks can buy Bitcoin and attack the network.
Yeah, I think that's a legitimate perspective. I come at it slightly differently, and I think I've spoken on this a little bit, but there are 53,000 blocks per year. Okay, that's, we talked about 150 a day. Well, you extrapolate that out, it's roughly 53,000 per year.
Okay.
Each of those blocks has 4 million weight units. At present, those blocks are all full, and they contain about 3,000 transactions. Okay. So the way the network is currently being used, you take 3,000 transactions times 53,000 blocks. That's 150 million annual transactions.
Okay.
That's the capacity of the network. Now, the transactions that are being included aren't necessarily the most efficient, because fees are so low. People aren't really incented. In other words, if I had to send money to you and another person on the same day, I'm probably likely to do it as 2 transactions when I could make 1 transaction, right? And send it to both of you at the same time. Very simple case, right? And I could save some V bytes doing that.
Mm-hmm. With 1 signature sent from 1 address to 2 other addresses.
Right.
Okay.
Yeah. So that's a simple example, right?
Okay.
So I think
I've never done that. So proves the point.
Yeah. So, well, yeah. And so I think with time, was it Josh? Is that, you said his name?
George.
Josh.
George.
George. Oh, George.
George,
Okay.
yeah.
Sorry, George. But thank you for your questions, George. So with time, there's a good chance. I still have mixed feelings about it, but we'll see some new opcodes. So this is new scripting language that will allow more creativity and more functions for Bitcoin. I'm still not sure I like them, but let's assume the one that he mentioned, which is called op CTV, which stands for check template verify. Okay, nobody needs to know it, but basically there's a belief that maybe opcat, which stands for concatenation, would give us some tools that would allow better batching, allow covenants, allow vaulting, some of these different things that would create some transaction efficiency. It's my opinion it will have minimal effect on the capacity of the network. It has a theoretical positive impact, but they're going to be very difficult to use. And I think in most cases, people are going to want to do what you and I just talked about. If I owe you money for something, I'm going to want to pay you now. And these other techniques, they really are help only in very specialized situations. So all that said, I believe in the end, what we'll find is that the network capacity will grow from 150 million to maybe 200 million, maybe 250 million. But there's 8 billion people.
This is because of optimizations of the transactions. We're going to be able to fit more transactions in the same block space. Is this what you're saying?
I think it's primarily behavioral by people doing what you and I talked about.
I understand.
Earlier,
Okay.
Which is, hey, I'm going to consolidate my UTXOs, or I owe 2 people. I'm going to be a little more efficient than I am today in the manner in which I do that. But it doesn't really change the order of magnitude of what we have. We have a network with a capacity of about 200 million transactions annually. And we already are in a situation, and that's with, pick your number, nobody knows what adoption is. Let's say 1% of the world really uses Bitcoin, right? Of the 8 billion people. And there are 330 million corporations also. So if you even look at that, 330 million corporations, let's say we reach a point 10 years from now, and 50 million of those corporations have a corporate treasury. Okay. If each of them does 1 Bitcoin transaction a year, 1 base layer transaction, they will use 25% of the network capacity annually. So when you do this math, and I appreciate the math you did as well, I think what you arrive at is block space is super scarce. And as we see adoption move from where we are to, let's even just say, a couple % of the world's population and a couple % of the world's companies, fees are going to skyrocket. And I believe that the block size, we're probably going to see a lot of moaning from the community about how expensive fees are. And we're going to see people start wondering whether or not big blocks should be allowed. But the problem is the one that you identified, which is we have to have a security budget. I believe we must have a network where demand always exceeds supply. That it maintains that scarcity level. By the way, if we started to see that wasn't the case, this will be very controversial. We should reduce the block size, like, make it even more scarce. Like it has to be, there has to be that. Because we have to keep those fees high.
Yes, that's the thing. We have to. That's the thing. So I was thinking, because again, the subsidy, which is the newly mined Bitcoin that gets closer and closer to 21 million. Just like 3 halvings away, we're gonna go from 3 Bitcoin to 1.5 to 0.75 and then to 0.3 Bitcoin, which is like nothing.
Right.
And let's say, yes, Bitcoin price went up, but what most people are missing in dollar terms, or let's say in purchasing power, even if the block reward is higher, again, the issue is that if your security budget from the total pool of wealth that is Bitcoin, if the security budget is such a small percent, that's a risk. And I'm not sure exactly how it's gonna materialize, but I'm confident that it's gonna materialize. And the only way for this not to happen is, again, I said 1%, but maybe it's 5%. I don't know what's the magical number, but there is a magical number, and it's not even that magical. It's more about how many people are thinking about attacking the network, how many people have any gain to do, economical or otherwise, like cyber terrorism, whatever, to attack the network. That would determine how much has to be this percent of the total value of the network that must be recycled through fees in order to protect the network. And I was thinking exactly what you said, but the other point. So you said that if there is not enough demand, we have to even reduce the block size. And I was thinking that's the thing, that even if we had a bigger size, of the block and then it just doesn't get filled in, or gets filled in with very cheap transactions, well, again, that's bad. That's a problem. So in a different way, I was arriving to, we must reduce the block size in that case.
Yeah, scarcity. I know we've been running long and I want to get to your other questions too, but scarcity is a very interesting phenomenon. I give well, actually, let's use this example. I've used it before, but let's say I have an apple tree. That's the only apple tree in the world. And it produces exactly 100 apples every day.
Okay.
When demand for those apples is less than 100, I have to they're almost free, right? To the 99 people that want them, that want 1 apple a day, they can have one for almost free.
Yeah.
But when, let's say, 105 people want apples, just the change in demand of 6 people, they start getting pretty expensive, because every day there are 5 people that don't get an apple.
Yeah.
Right? So, think about that with block space. We live in a world. Now, the caveat is the mempool. Granted, there's a lot of them, right? But we'll go back to that. There is a mempool. We've consistently had over 200,000 transactions waiting for confirmation for 18 months.
Now, the past 18 months.
One time. Yeah, hasn't cleared one time.
Because I remember in the past, the mempool have been going up and clearing, going up and clearing. I haven't checked recently, so you're saying that it's
18
stacked
months.
up quite some time.
Yeah. We're in a position, though, where a lot of the confirmations waiting are things like UTXO consolidation. So they don't have urgency tied to them, right? They're low fee, like, hey, if I have to wait 30 days, so what? Or 2 weeks, or even 10 hours, it's okay. But the moment you and I are using it for true economic activity, urgency comes in, right? So if you're gonna do a project for me and I have to pay you 1 Bitcoin for your labor, you probably want to get paid today, like or soon, right? Or you won't start the work until you get paid.
Yes, so, especially if you have some materials that I have to buy or something, like you have to give me the 20% beforehand before I start even buying the stuff. Yeah.
Right. So as Bitcoin moves into that world, it changes the urgency of the transaction. And that changes a lot in the way the fees happen. Because
earlier I was thinking, when you're talking about economical activity, that the Bitcoin blockchain, generally speaking, 10 minutes is quite a bit. Like, let's say if I'm at the store, just trusting the mempool, oh yeah, you signed a transaction, but then, the same way with credit cards, that there is chargebacks where it's part of the price of the item that, let's say 1% of all the transactions get charged back, or whatever the percentage, doesn't matter. And my point is like the same thing with Bitcoin and the mempool. The idea is you cannot trust transaction in the mempool because it can be spent with the how's it called, replaced by fee functionality, for instance, and stuff like that. And this is why we have the Lightning Network, right? So to me, it makes sense. The Lightning Network, the instant transactions, the bit less secure, the bit less decentralized, whatever, for smaller stuff. So when you said earlier about the transactions from the corporations and so on, again, to me, it makes sense to have, like, me as a person, to have two on-chain transactions, one receiving my salary and one where I send to my savings account and to my spending account. Yeah, exactly, to fund my Lightning, and then I start spending over the Lightning. Yeah. We're gonna skip the question number 4. We're gonna go exactly to number 5 because it's a very interesting question that I hope you're familiar with this topic. It's a link to a Bitcoin magazine article called Satoshi's Hill is mining infrastructure a vulnerability that could take down Bitcoin. The Bitcoin mining network presents a potential vulnerability to the network that could prove to be an Achilles heel unless addressed. I haven't read the article. George asks, are you familiar with this? And can you share with us your perspective on this article?
Sure. Yeah, actually, I wrote it, so I am familiar with it.
Oh, it says your name here. Oh, yes, sorry. Yeah. Sorry, wait. Maybe it didn't say are you familiar. Wait, let me see what it says. So, the best theory that I've heard about the weakness in Bitcoin is, it's his article on Achilles heel on Bitcoin. Can you summarize it, and can you add your thoughts about it? Did your view change, or is it the same?
Yeah.
So George's a big fan, as he said earlier. Okay.
Oh, well, again, thank you, George. I appreciate it. I'll come see me at a conference or something. I'll buy you a beer, George.
He might have met you, by the way. He's been to most of Europe's largest conference, if you visited.
At which one? I'm sorry.
Oh, the large ones. I know that he's been to Amsterdam, to oh my God.
I've been to Prague twice.
To Prague, yeah. He's been to Prague twice as well. So I think you might have met, yeah. Okay,
yeah. So and I'm planning to go again this year. So and maybe Bulgaria too. So so the basic premise, this is a thought exercise, and it's meant to provoke people to think about directions, and it's preventative. Okay, the basic concept is this: imagine a world 15 years from now, 20 years from now. So we're far enough in the future, lots of things could happen, right? Imagine that 99% of the hash rate now sits in these big public mining companies. I call them elephants, okay? Big sites. Like we don't have small mining sites. There's no 1 megawatt, 2 megawatt sites. They're 500 megawatts, a gigawatt here, a gigawatt there, right? Only 1% of the world's hash rate sits with small miners. Okay.
I hear you. Just a second though, I must say that I do not see this vision as the most plausible one. I see the vision where we have a bunch of small miners and we reuse the heat out of the miners for other purposes. Like I've heard of like a winery or something that's underground and it needs, for instance, exactly 18 degrees Celsius, and underground it's like 13 and they heat it up to 18, and because it's underground it's consistent 13, and then heating it up with X amount of miners it's exactly 18 throughout the year, and it's like, you know, this is exactly what they need for their wine or whatever. And I see this being used for other factories and let's say hospitals or whatever and so on, where the weather is colder usually and you need that. So this is the vision I envision. Yeah. I do not envision 99% in big miners and centralization and so on. I see more and more decentralization in home mining happening and not just home mining, but small companies mining that are not companies related to Bitcoin, but they need heat, and they use miners as the most double purpose efficient heaters. Or I hope this happens.
All right, that's good. Well, as I said, this is done as a thought exercise and as a warning.
Okay.
So I am not disagreeing. it is if we let that happen. Okay, so that's the purpose here. But we're going to start with, we'll talk through a couple scenarios. This first scenario, though, I want to start with this radical one.
Okay.
I also want to point out, I believe Bitcoin has the possibility to be money for 1,000 years or more.
Okay.
Okay, and so this is also a warning to future generations where things could change in a way that we don't understand and we can't foresee.
Okay.
And so I'm issuing this warning to the world for that. Okay, so 99%, 1%. Okay. Now, let's also say that 99% is concentrated in 100 facilities around the world.
Okay.
Okay. Now, political forces in the world become such that they want to kill Bitcoin.
Okay.
Okay. So if that were the case, this is the way that I think the attack would occur.
Okay.
What they would do is they would wait for a difficulty adjustment to occur.
Okay.
Okay. So those out there, every 2016 blocks, the difficulty adjustment occurs. And what it happens is it looks back at the previous cycle of 2015, actually, looks at what happened in the previous one and says, hey, was our average time higher or lower than 10 minutes?
Mm-hmm.
And I make an adjustment to try to get it back to 10 minutes.
Mm-hmm.
Okay. And so constantly trying to reset it.
Mm-hmm.
So the network resets itself to the 10-minute mark based on the difficulty.
Mm-hmm.
Now, what I would do if in a coordinated effort is I would cut power to all the facilities.
Mm-hmm. And blocks are gonna happen extremely slow, and the next difficulty adjustment is gonna be not in 2 weeks, but in like 2 months or 2 years or whatever.
Almost 4 years.
Oh, if you have 99%, yes, sure. But okay,
yeah.
Sure, okay.
Yeah. And if enough time has passed that the small miners don't have any hardware on the shelf, like if that happened today for some weird reason,
mm-hmm.
people would be going into their storage closet. Try to start mining. But so what would happen is it would take so long to get to the difficulty adjustment that no new Bitcoin would be coming into circulation, right? Whatever the subsidy was at that time, none is being released. But more importantly, no transactions are occurring.
Yes.
So it's not a 51% attack. Nobody's trying to double spend. It's just creating a complete halt of economic activity.
Yes. On layer 1, but not on layer 2.
Well, but at some point, even layer 2 will have problems because channels have to open and close. They have to splice. You have to move liquidity around. You would have a period where layer 2 would be okay. You couldn't open new channels. You couldn't, like I said, you couldn't close them. It would be very, very disruptive, right? Now,
yes.
3+ years later, when the difficulty adjustment actually was ready to go and it turns on, right? So I would turn the machines back on.
Okay.
And I would rip through those blocks in a matter of, like, I don't remember I did the math in the article. It's been a little while, but
I was thinking about that though. But here is something that if correct me if I'm wrong, but the difficulty adjustment algorithm cannot adjust more than 20-30%.
25%.
Okay.
25%.
Yeah. So
that's in the article.
Yeah. Okay. Because I was thinking I didn't know about this, that it's limited 25%. I was thinking about scenario like that, and then I was like, if the aliens come, they can, like mine all the Bitcoin, all the blocks, for thousands of years in the future, extremely quickly or whatever. But actually, it doesn't work exactly like that. Okay. Anyway.
Yeah. So at that point, let's say it even runs for 2 weeks.
Okay.
Just for whatever.
Okay.
I would then turn the machines off again.
Okay, yeah.
Okay. So basically, you could ruin Bitcoin. Now, in the things we could do, yes, you could fork Bitcoin, you could do all kinds of other things, but it would be very messy.
Yes.
And you'd have to fork, you'd most likely need to fork to an alternative algorithm that's not SHA-256 based, because they'd always have the ability to use the mining machines against you. So this, I call this the night terror scenario. Now, there are other scenarios. I don't want to go through the whole article. It's available on Bitcoin Magazine. If you either Google or search on my name or Satoshi's Hill, you can read it. But I go through other scenarios. But basically what I show at the end of the article, and this is getting to the point you made, is, hey, as long as we can keep 15 to 30% of the network out of their hands, this scenario becomes irrelevant.
Okay.
Like, it doesn't, they can't really attack on this vector.
Okay.
And that's the point of the article, is to say the risk exists. I don't think it's a risk that exists probably in my lifetime. It's probably unlikely in my lifetime, but it's a message to future generations, because I think what can happen easily, if you and I are Bitcoiners, we joined in the same time period. We have a lot of conviction behind this. We understand the problem that caused us to want to be involved with Bitcoin and spend so much time on Bitcoin. But 3 or 4 generations from now,
might forget the history and repeat
they
it.
forget. Yeah. It's, and I think, this happens in the United States. I think, the why is the US Constitution written the way it is? Why is there a Second Amendment, which is the right to bear arms? And why is there free speech? And I think we're at far enough time, don't have a history as long as Bulgaria's, but, people I believe are forgetting the reasons and starting to fall victim to saying, well, things aren't that important.
Okay, I must say that you must come to the next Bulgarian Bitcoin conference, having in mind that not only you've heard of Bulgaria, but actually you know that it's an old country.
Yes, I would love to come. I hope we can work that out.
Okay, we've run over already close to 10 minutes. I want to wrap things up because I know that you're a busy man, but thank you so much for going over the everything and going over the article that you've written. I would advise everyone who has a internal worry about this topic, about the future of mining, the 51% and so on. I understand it's a very, very a long shot of this materializing and becoming a problem. In that point of view, I agree. We're stuck. We're in Bulgaria. We're a bit still stuck in the present. And is Bitcoin a pyramid scheme? Our government's gonna ban it, and so on. We're still fighting over this foot. So this is my day-to-day life. So this was so refreshing to having a proper Bitcoin conversation on the topic of Bitcoin mining, economics, and so on. I would love for you if you come, let's say, at the end of Q1 to visit us again. We're gonna prepare new questions and discuss Bitcoin in more broad. Terms.
I would be happy to join you again, and I want to be clear too. Thank you for having me, by the way. But some of my topics might sound dark, even the last one. I'm talking about a doomsday scenarios, right?
Yeah.
I don't want that to be taken as, hey, this Bob guy, he's not optimistic. I am super optimistic about Bitcoin.
Yeah.
But I'm an engineer, I'm a technologist, that's my background. And I'm programmed personally to say, what can go wrong?
Looking for problems,
Looking for
and
problems.
Solving those
and
problems.
Fix it before it becomes reality.
Yeah.
So just know that I do that. The things I talk about, and I even have more bad stuff to tell you. But I only say it because for me, if we're going to be money for 1,000 years, and I hope we are, then even something that has a 1% chance of happening, that's a legitimate threat in my mind. And I have to I feel obligated to spend time thinking about it and preventing it.
Yeah.
Because over a 1,000-year period, something that has a 1% chance becomes highly likely over 1,000 years, right?
Yes.
So I just want to be clear to anybody that listen. I want you to walk away really optimistic. I'm really optimistic. Bitcoin is a marvelous, marvelous gift to the world. We just have to take care of it. And this is me trying to perform, at least with what my knowledge and my experience, perform that service.
Amazing. Thank you so much. Really.
Thank
we
you.
do appreciate. Have a good day, good night actually to everyone. And if you share the link to the conversation to anyone outside of Bulgaria that have listened to this conversation in English, I hope you got some value. I personally really did. I'm happy that this is one of the greatest concerns that you have written about, which is for future generations. So therefore, you know, the probability of us actually succeeding and moving out of the fiat standard and getting onto a Bitcoin standard, I would imagine is like quite high. Have a good day, everyone.